So I wanted to start this conversation around just investing in general.
Yeah.
And I thought, Jaime, maybe you can kick that off. And let's just talk about, like, no one teaches us as women about investing, which is really unfortunate.
Yeah.
But you and I talked about this a little bit. So maybe let's talk a little bit about that.
Yeah, I mean, absolutely. And I'm going to go back to a little bit of how we were raised, right? So I was raised in a very traditional home. My mom stayed at home. There were 4 of us. My dad worked. He did the investment decisions. She did the groceries and made sure we all didn't kill each other. And 3 of the 4 of us survived. I'm just kidding. No, we all. But I remember as a kid being like, no, I want to do that. That looks really cool. Like what my dad does seems to be cool. So, I mirrored that. But our role models, our moms, in many traditional roles, and it's not all the case, wasn't necessarily who we were looking to do investing. And so, I went into accounting, I studied valuations, but investing at the end of the day is empowerment to us as women, right? We need to invest. We weren't necessarily given the genes at a young age to do that, and so we have to be very thoughtful. We have to intentionally decide to go out and make this a priority, so the bags come after we own the real estate as opposed to before we own the real estate.
Well, we live in a society where it's all about instant gratification. So you tend to, you shop, you buy, but the reality is if you actually saved and put it down as an investment in real estate, and we're going to talk a little bit about that because, you even look at Lanterra, and I remember a girlfriend of mine invested in One Bedford, and she quadrupled her investment. And so, it's, and we'll get into investing in real estate. But Meera, for you, I mean, you're the CFO at Lanterra. Talk to us about, what you think about, when you think about investing just in general.
So, again, same here. So I come from a very middle class, and my dad is a professor. All we were taught is to study, but again, it was a very hard to get anything that we wanted. So when I came out, very ambitious to get up to where I wanted to be. So I skipped grades, lots of studying, lots of hard work. Everything, like I think from 18, I aimed to invest. So 20, I started to actually invest. All I was doing is just focusing on investment, real estate. That's been my passion. I mean, then I started to kind of start working. I mean, I happened to study in the area, and I came out, and I happened to roll myself into a company where I was able to work on merger and acquisition, which I loved, and then I started to kind of, roll myself into commercial, industrial asset, different class of asset, and here I am with Lanterra for over 20 years into condo development.
So you've worked at Lanterra for 20 years? That's
right,
incredible.
yeah.
So, that's awesome. Congratulations. Yeah.
And I just love it.
Yeah.
And every day I come into a very excitement world. Every day there is something.
Well, Barry and Mark make it exciting.
Yes,
for
sure.
And
I follow their dreams, and happen to be that's my dream as well.
Oh, I love that. That's
Yeah.
amazing.
Yeah.
Well, let's actually then talk about investing in real estate. Because I actually truly believe it is the best investment you're ever going to make. And so, Jaime, let's get into it.
Yeah. Well, I mean, I think if we take a step back, right, and investing doesn't start out sexy. So I have a girlfriend right now, and she's going through a terrible divorce, and she doesn't have a lot of money, but she has a little bit of money. And she's like, Jaime, what should I put this into? And she'll pull like a biomedical stock that's like in stage 3. I'm like, no. Investing's not sexy. First of all, make sure you have enough money. If you lose your job, you can make your rent. So you get your cash stock. Then you put your money away to make sure you start having your RSPs and you benefit from the tax side of things. And that's the boring stuff. But until you get the basic security in place, you can't get to the real estate. So let's assume you've put that in place. Let's think about real estate. Real estate is not a short-term investment. The number of times I get into a taxi and the taxi driver says, what do you do? And I say, I work in real estate. And they say, should I buy a condo? I'm like, well, I don't do that kind of real estate. But the reality is you can't make real estate as buying it today, I'm going to flip it in 12 months. You see that all the time. that might happen. Real estate's a 10, 15, 20-year investment. So you think about the environment we're in today, and a lot of people say, what do you think about the market? The market's slow. Interest rates are high. Inventory is accumulating. Home sales are down. I think I saw the other day, this, you know, and I'm not putting any stats out because JB over there, who works on my team, said he's going to call me out if I have any stats, but there's a 66% reduction in the volume of sales for condos. So if you were sitting here today, you'd look at me and go, Jaime, well, real estate's dead. It's not dead. We've had 20 years of an up market. To your example, your friend, I was looking at like actually the calculation. If you invested in 2013 $500,000 into real estate in Toronto, today it'd be worth 1.1 million. Right? So that, like, and that's actually not a crazy growth rate. That's about 8 to 9% a year. But real estate has consistently done that, and you've got to ignore these moments in time, these cycles. We're in a bit of a correction right now. We're going to come out the other end. We're going to have to burn off some inventory. It might take 2 years, 3 years. I'm hoping 18 months. But we're going to come out the other side of it, and we're going to grow again. In fact, now is a great time to invest. Look at the Natasha condos, just to plug for a moment. But right now, we're not selling at a great pace. I would be buying them right now because as soon as the market starts to explode again, we're coming out of the ground. Everybody sees the beautiful Natasha marketing. Our prices are going to go up.
We're 75% sold, which is pretty amazing. Like when we launched, you guys remember,
Yeah.
within like 6 or 8 weeks, we were at 70%. And so you kind of figure where we are right now, and by the time the building is built and you put in an investment, it's already going to be worth more. Because even when you look at what's around this area, there's Freed launched their building at 2,300 a square foot.
That's right.
Devron launched theirs at around, was it 1,900 or 2,000?
Close to 2,000.
Closer to 2,000. And so when you look at where our numbers are today, where are they today?
So we're at 1,900.
1,900.
Yeah. We started at 1,600. Between 1,400 and 1,600 was the range.
Yeah.
Right? And then we're close to, 19.
Which is pretty incredible. Like I think about, my greatest investment was actually my home. I bought my home in 2009 for 2.9 million, and it's worth 8 right now.
Yeah.
So you kind of have to figure, like that's real estate.
Yeah.
And so I have to say, even for myself, buying at Natasha the Residence, I mean, I'm so excited. We bought the 2 penthouse suites in case anyone wants to be our neighbor.
That's amazing.
Talk to us, Meera, about Lanterra and some of Lanterra's projects, because, like I said, I have a girlfriend that bought at 1 Bedford, and it's pretty incredible just the value of some of the projects and how much they've gone up.
So with Lanterra, so I've been with Lanterra for long enough to be able to kind of, because I've gone through different cycles. So back in 2008, we had not the same as today, but we did have I would say a correction period again. But we came out of it because our projects are very unique. And we focus on what everyone is looking for, amenities, location, and we gear towards delivering the product that everyone enjoy. We want to make sure they enjoy living in the buildings. So we don't just go out and build cookie cutter. So it's very important for us that everyone enjoys. So we are geared towards that. So doesn't matter like where the economy is going. Yes, of course it's slow, but it doesn't totally affect us. So going back to the projects we built, I mean, Water Park City was our first project. Mm-hmm. I walked into when we actually launched Water Park City 3. So it was exciting for me to actually watch then Maple Leaf Square, 18 Young, Toy Factory, Young Lawrence.
Iconic project like,
Yes.
in the city. When you think of like Maple Leaf Square, I mean, it's so iconic. Every single project that Lanterra has done is epic. Like it's a real landmark in the city.
Yeah, I agree. That's why when I say I enjoy every day, and I actually did. I watch it happen, and there's going to be issues, but we know how to actually get closer to the matter and correct it. So that's the beauty of working with Mark and Barry, and I enjoy that. So I don't know what else I haven't listed here, but there are 25 projects, 41 towers we built in the 25 years.
Wow.
of Lanterra time. And 2024 is our 25th year. So I'm so happy to be with the developer who worked towards promises and delivering the promises.
Well, it's interesting. When Mark approached me to name a building after me, I have to say, because often people ask, like, what's that story? And I'll tell you what it is. So it was January of 2020, and at this point we were working with Lanterra and doing their PR and the various projects. We launched 50 Scholared. We were working on Notting Hill at the time. And he called me into his office and he's like, I want to talk to you about something. And I felt like it was like going into the principal's office. I'm like, oh my God. And he said, I have a great idea. And for those of you that know Mark, you know how excited he gets when he has like a really great marketing idea. He's like, I want to name a building after you. And I just thought, did I hear that correctly? And he said, yeah, we just bought a property, like land on Adelaide Street. Your office, this was our old NKPR office. We were here for like 15 years. We just moved last year. And he's like, you know this neighborhood so well. You've lived in this neighborhood, worked in this neighborhood, played in this neighborhood. You know, we couldn't think of a better person to collaborate with on this project. And I was so honored, humbled, excited, and nervous. Because I've never done that before either, like a true collaboration that would mean so much to so many, right? Because it's your home, like you're selling people their home. Mm-hmm. And I said yes, and the journey began, and it's been so exciting because I've had the privilege to work with Alessandro Munge from Studio Munge. And for those of you, I think most of you will know who he is, but I don't think Alessandro is doing very many projects in the city anymore. He's in Miami, he's in Asia, he's international. So the fact that he has designed Natasha the Residences feels just so important and so special. Yeah. I was able to collaborate on all the amenities. And so I actually think the amenities at Natasha the Residences are like just, they're meaningful. We have a content studio because I feel like the people that are gonna live there are like urbanites. You know, they might work from home, they might work from their space, they might, you know, walk to the office, but like content is important. Like we're creating it, we're absorbing it, and so we have a content studio. We also have a pet spa, because I actually have 2 black labs, and so they were in some of the creative imagery as well. So we have a pet spa, and I don't believe that we actually have a restriction on pet size, do we?
No.
No, so that was really important too. We have a laundrette. So do you know of another condo building? So we're going to have washers and dryers in every unit, obviously, but we also have created a laundrette. So if you're asking what that is, like think about most condo suites have very small washers and dryers, so you can't do your duvets. We're going to have a space that's going to feel like a community and a social space, so you can actually, like, as you're maybe doing your like big items for laundry, you can also like meet people. So think of any romantic movie ever, where like boy meets girl, they're always in the laundry, you know, like doing their like intimates, you know, and that's how they meet. So we wanted to create social spaces where people could actually meet. And, you know, yes, you have your units where you're gonna live in, let's say, you know, 500 square feet, 700 square feet, but we have 20,000 square feet of amenity space. So actually you're living in 20,500 square feet because we've created amenity spaces that you can actually use, as opposed to, you know, sometimes there's amenity spaces that are there because they should be there, as opposed to like what will actually be useful for people. And I had the privilege to work really closely with Mark and Alessandro on developing and creating those spaces. And so not only are we, I think, in probably one of the best areas in the city, because everything's around, you know, around the corner. You have the Bell Light Box. You've got all the restaurants everywhere. So it's just, you're so close to everything. Yeah. And you have the Soho House across the street, which is kind of nice, and all the hotels surrounding us. So it's, I mean, I don't know. I feel like it doesn't really get any better than that. What do you think? I mean, it is a question that I think a lot of you have asked as you were coming in, the market. I know that it's making a little bit of a correction, but you're seeing sales happen. It's not like they're not happening. And so let's talk a little bit about the market, because we know it always ebbs and flows.
Yeah.
And we talked a little, you mentioned a little bit about that, Meera, where like 2008, yeah, there was a little bit of a correction there. And I feel that's what's happening right now. And I do think there needs to be a bit of a focus on end users, because right now, end users are the ones that really are looking to like invest. So maybe Jaime.
No, I mean, I can start and Meera jump in, but I mean, first of all, if you're talking about Natasha, you're not talking about today's market, right? You're talking about the 2028 market. But I mean, there's a bunch of things going on right now. The rates are high and they're starting to come down. So we saw the 25 basis point drop. We'll probably see another one in the next month or two. That's causing within the market like a lockup, because it's really everybody's just waiting. Everyone's waiting to see what's happening. So it's not so much that there's a softness or an unavailability of capital to invest in real estate. It's just that people are sitting on the sidelines saying, well, why would I invest now, lock myself into debt? And a year from now, it's down 100 basis points. So there is a pause, there is a lockup. But the other interesting thing that's happening behind the scenes, and we should not lose sight of, we are in a housing crisis right now. We need to build, and the number keeps going up. So that right now, the country, outside of the already 2.5 million homes being built, need another 3.9 million homes built by 2031. So we have a shortage, which means the value of the housing that's being built, Natasha is an example, rentals are another example, are going to continue to grow. So you have to sort of put your earmuffs on at the fact that we're in a cycle right now. We are seeing a correction. Rates are high, money's not moving. That is a short-term issue. It's going to happen. It happens in every industry. Gold, you think about tech stocks. All of us have our cycles. Real estate's just in a pause. Again, I think a pause like now is a great time to be able to invest, because you're getting in front of what's going to be a flood as those rates come down.
So to add to that, I mean, obviously we're starting to see the forecast. I mean, I think the forecast is showing that we're going to have another 75 basis point this year and maybe another 75 basis point next year. So by the time the Natasha is going to be delivered, we're already going to be in a more stable market. So you know the price now. So buying something now and then based on the market, in my opinion, going into the pre-development investment is a lot more making sense, because and to make it even more sounding better here is the deposits. So we've never seen this deposit structure ever before. So that's also going to help if you're going to be borrowing from line of credit or whatever, and great time to invest in. And in my opinion, this is like a perfect time. If you're going to be an end user especially, it's a perfect time to invest in.
That's a great point. That's an excellent point.
Deposit structures now.
Well, I'm seeing 5%, and then another 5% 30 days, and maybe 5% in 90 days, and then 5%. There's a bit of a flexibility there based on the size of the unit and then the deposit amount. So if the unit is a lot bigger, obviously, you know, there's a bit of a flexibility out there, right? Which we haven't seen. You're so used to, when Natasha was launched, it was like 20%. So, and even the banks are, you know, looking to, you know, look at what the deposits should be. So there's a lot of flexibility, but because of the time that it took for the market to kind of where it is today, I think everyone's trying to understand, okay, so how do we now innovate the deals and how do we approve? So I'm already seeing, I mean, for Lanterra, I've looked at the sales this year. We've done close to 27 mil overall sales, which is great. Yeah, good job, sales team here. And I know that they're working on another maybe 5 mil deal, which, like, it's happening. So it's not like totally on a park, at least for overall Lanterra projects.
Yeah, I mean, even Natasha, the residences, I know that we initially sold 70% right away, and then the last 5% has actually happened in the last, I guess, year and a bit, right?
Yeah.
So I think that's really interesting. I do want to talk about the rental market.
Yeah.
Because I have girlfriends that, you know, they're successful. They often ask about investing in real estate, and they want to, but then they're like, well, I don't want to be a landlord, and what does that look like? And it just feels so onerous. And then at the same time, I'm like, but you should actually invest in real estate, because nothing is actually a sure thing other than real estate in my mind. So
I hope so, because I made a whole career on it. So. Now let's talk about rentals. So, and this is one of those things that you sort of have to talk it through to think it through. So Let me address the landlord point. You don't want to be a landlord. So that's why you hire companies, third-party companies, to manage it for you. It is important to understand the law and everything, but just don't make that part of what you're dealing with. Hire a good company that will landlord your unit for you. So let's park that. I mean, a couple facts. One is, I talked about the housing shortage. The most important part of that housing shortage is actually the rental market. And the propensity to rent in Canada, as housing becomes less and less affordable, rentals become more and more attainable for people coming into the market. Also, a lot of people don't want to be tied down to home ownership. So there's just this huge demand for rentals. What I would also say is that in the Toronto rental market, it's about 650,000 units, right, JB? Yeah, roughly. Okay. Half of them are actually condo rentals. So half are groups like Fengate. We build towers, we rent out units. Half of them are actually units like this in the Natasha residence. So you think about it, you put your deposit down, you buy the unit, you get a mortgage, you get somebody in there paying rent that's covering your condo fees and your cost of debt, and you just park it and forget it. And in 10 years from now, that's worth twice as much, or even more than twice as much as what you originally invested it. It's a brilliant opportunity to build wealth and not worry about it.
The reason we're hosting this today is exactly for that reason. I have so many, just successful girlfriends that have been intimidated to invest in real estate. And I will say that until I started working in this space, I was too. I just felt like I didn't want to be a landlord. I was putting my money where I wanted to wear it. I would invest in my home or, I guess some real estate, but really not to the extent of where I should have been investing, and understanding it better now. I truly believe it's the best investment. I actually think when the market is the way it is today, it's the time to invest, because to your point, I've never seen, and we work in this space a lot, the incentive programs, I've never seen anything like it. The way deals are structured right now is pretty, it's pretty impressive, actually, and very, very creative. I do want, before we take any questions, I do want to maybe get an update on construction for Natasha, the residences.
So in terms of permits, so we're kind of
Because originally, just to, I guess, qualify that, we did a groundbreaking a year ago, and it was actually an awesome party. It was great. But we couldn't actually break ground because we were waiting to get permits because of the heritage portion of the building.
Yeah, which wasn't truly under our control, but we passed it now. So we're in the midst of submitting, and we think by end of September, early October, we should have the permit.
So we have to do like a groundbreaking party, like right on the street,
Yes.
like Sex in the City style, where we have champagne on the street, like something really fun, and you're all invited.
And we can use high
yeah,
heels
we're very
to dig in.
close. Yeah, we're so excited as well. I mean, it's a great project. It's a Lanterra Fengate partnership, and it can get better. Like right now, with whatever that's out here, it's a great project. We're so proud of it.
Thank you. Well, I'm really proud and excited to be part of it. I thought maybe, was there anything else you guys wanted to add? Otherwise, I was going to open it up for Q&A.
So just to add where we are with the construction, I also want to add, we are looking to finish we're showing by sometime in 2027 being the occupancy, if the milestones are all going to go the way that we predict, and obviously in 2028, it will be delivered. So it's an awesome time for investment now, and based on where we are, because we're more in clear for the permit, so it's a great time.
Yeah, I mean, I have to say, whether it's Natasha, the residences that you're investing in, or you look at any of Lanterra's projects, from a builder standpoint, they're a very trusted builder. 25 years. 25 years in this industry is not easy. And they've built some of the, like we said, the most iconic, epic buildings in the city. They built communities. And I think that's what's special about Natasha, the residences, and being able to work on that from the inside out, is we've created a sense of community inside the building. With all the amenity spaces that we created. And so, like I said, we basically, I feel like if you're buying a unit at Natasha, the residences, whatever your square footage is, add 20,000 square feet to it because we have 20,000 square feet of amenity space, which is pretty neat.
Which is amazing.
Yeah.
And it's a
awesome.
thought-out amenities.
Yeah,
So,
yeah, that's true. Do you guys have any questions about actually anything? Real estate, investing, the market. These are definitely your experts to talk about the market.
Can you talk a little bit more about the Fengate collaboration? Like, have you bought a bunch of units and you're going to be renting them out, or what is the?
It's a great question. We're actually the 50% investor beside Lanterra. So we represent institutional capital. So our main investor is LiUNA's pension fund for Central and Eastern Canada. So anybody who knows LiUNA is actually the laborers, the people that work on the site. So we invest a lot of real estate on their behalf because their people are the ones that are actually going to work on the site. So it's pretty cool to see the laborers come onto site, they see the big LiUNA sign, and they're like, hey, the work I'm doing is going into an investment that's ultimately going to grow in their pension plan. Some background on Fengate. So Lanterra, we see thousands of projects every year come across our desk. So we saw Lanterra come across. Before I was at Fengate, I was at another company, a real estate company, Minto, actually. So I knew the Lanterra and the Mandelbaums and was really excited to work with them. Funny enough, when this opportunity came across our desk, it was March 2020. And literally, we were going to our board for approval to make this investment the day we all got sent home for COVID. And I canceled the board meeting because I'm like, I just need a minute. Like, what am I doing here? And what are we going to do? We're going to invest in this massive condo, and we don't even know what's happening in the world. And we just took a breath, and it goes back to my point about real estate. Real estate is a resilient asset class. It's been a great investment, but I can't say enough things about Mark and Barry, yourself. It's been a great experience. But just from background on Fengate, so we actually have a massive residential pipeline. I see Allison, the head of our development, back there wondering what number is going to come out of Jamie's mouth because I keep growing our pipeline number. So we have about 30,000 units in our pipeline at different stages. We have a large industrial portfolio. And fun fact, we actually own the Virgin Hotel and Casino in Vegas, too. That's my other side fun project. So I get to go to Vegas like every 6 to 8 weeks, and I never get to have fun. But it's still pretty cool. It's still pretty cool.
So will you be managing the rentals as well? Is that part of the opportunity if someone's buying a Natasha condo? Because I'm a realtor, and if I have an investor that wants to buy, part of my bread and butter, if you want to say, is that I'm servicing that client. So, and they look to us for that support. So is this something that you're offering in the project?
So not Fengate. We actually outsource any of our residential property management, but we'll probably work alongside Lanterra, and we'll have give access to clients who want to have that. Because to your point, nobody wants to be a landlord.
But Lanterra has an arm, so we do have Whitestone Rentals. So you can pull in the units, and then they can manage on behalf of the investors.
I think that's actually a really important point. I think a lot of people don't realize that. Can you talk a little bit about that?
Well, we actually created this arm back, I can't remember, I think 13 years ago. It's the same thing back then. We launched a project when the market was a bit slow. I think it's Treviso Phase 3. Mm-hmm. So at that time, we said, okay, I think this arm makes sense. A lot of real estate agents came to us and say, okay, we have agents. I mean, it's not more so happening today, but back then there was a lot of overseas investors. So an investor would buy 10, 15, 20 easily, and they want someone to manage, and that's why we created the arm. So this arm it's not looked at as a profitable arm, but it's really created to help the marketing. So you can go to sleep.
Exactly.
Yeah.
Exactly.
Okay, well now we can network and mix and mingle. That's awesome. Thank you so much for coming,
Thank you.
Jamie.
Thanks,
Meera,
everyone.
Thank you so much. Thank you.